Well, if you can explain it, let me know in the comments below. But a few minutes ago, the market just kind of collapsed rapidly, taking Tesla down with it, although it does seem to be easing back up a little bit now, but not in a way that makes me confident that we may not go back and test those lows from what is today? Yeah, that would late last week. So Tesla at 283, I'm sorry, 383 would not shock me today. That's where we are as we go into the double double-edged sword. But the one of those edges to the sword is not going to be decided before December. So what are we going to do while we wait for the Fed's decision? In the meantime, people are all concerned about Nvidia. They're concerned about the bubble popping, Peter Thiel selling off his Nvidia stock. There's an awful lot of chatter going around about whether the market is just over, it's just over exuberant about all the AI stuff. And we've got a market that's a little skittish right now. Anyway, the decision with regard to pausing or not pausing on the Fed, we seem to have a split decision. I mean, really split. I asked Grok to really go back and analyze, and it is, there seems like no way they're gonna be able to pull together consensus. Just maybe vote, and if it's, what is the number? They have 13, 14, 15, I don't know, 9 and 5, 14 or 15 of them, and maybe Fed Chair Powell will be deciding vote. Nvidia earnings and any statements by Jensen tomorrow are definitely, the real big deal right now that's on the table. Most people are expecting Nvidia to beat handily. Most people are expecting Jensen Huang to be his normal charming self and say lots of good things about the future. And who knows about new deals, new products, et cetera, that might come out in the meeting. Now, Tesla is actually holding up pretty well, given how much the market is down. Tesla's not down as much as Nvidia at this point. But as I said earlier, we might be going to test that 382. Investopedia says this morning, you might hear very similar thoughts on Nvidia as you commonly hear going into the Tesla earnings. Nvidia is set to report its latest quarterly results after the closing bell Wednesday, with traders expecting a big move in the AI chip maker stock. Options pricing suggests traders expect Nvidia shares could move 7% in either direction. Where have we heard that before? A move that's, 7%, that's what they always talk about with Tesla. A move of that size from Monday's close near 187 could help the shares recover some of the recent losses, which are down about 15%, to return to last week's levels around 189 or pull them down to 174, a level not seen all the way back in September. The market's actions these days just seem to be doing in a month what they would normally do in a year. In recent quarters, Nvidia's earnings have tended to be a sell the news event, despite a string of record-breaking results. In all but one of the most recent 4 quarters, the chipmaker stock finished the week lower than its levels heading into the event, even after great guidance and great et cetera, et cetera, et cetera. That's Randy speaking. With expectations riding high ahead of the earnings and results from rival advanced micro devices, and other AI favorites indicating investors may be harder to impress this season, Nvidia could face an increasingly difficult bar to clear. And why this matters? Well, this year's big rally in AI stocks, which made Nvidia the world's most valuable public company by market cap, has fueled worries about an AI bubble, and investors will be watching closely whether the chip maker can deliver on its ambitious growth targets. Nvidia's earnings release is the most highly anticipated event of the earnings season, no kidding. Nvidia's seen reporting adjusted third quarter earnings at 126 on a nearly 60% year-over-year jump in revenue to a record 55 billion, according to estimates collected by Visible Alpha. Whisper numbers could be higher, with analysts from Jefferies and Wedbush telling clients recently they expect the AI darling to beat and raise on top analyst quarterly projections, as well as lift its full-year outlook. Still, Wall Street analysts are widely bullish Nvidia stock has room to rise after a nearly 40% gain so far in 2025. All but one of the 13 analysts with current ratings compiled by Visible Alpha call it a buy, with their mean target near 219, suggesting roughly a 17% upside from Monday's close, but now it would be more of an upside. Nvidia's down about 12% from its all-time high. I put that together before this additional drop, so it might be 13% now. So what happens when Elon Musk, I was going to ask Rock this morning, so I'm just going to have to go off my own memory. Maybe you can let me know in the comments below what you think. What happens when Elon predicts the future market value of Tesla shares? In the past, he has said, I think Tesla's overpriced. I think he's done that a couple of times in my recollection, and I think both times the market went down. I think a couple of times he said that it seemed like the shorts were going to get burned, and even came out with some hot, shorts as a gimmick. Now he's telling Gates, you better get out of your short position if you haven't already done it. And then there's this. Golly asks, when does Tesla stock have its Nvidia moment? And believe it or not, Elon answers, major valuation change when there is an unsupervised self-driving at scale. Oh, who's been saying that month after month after month? And even larger valuation change when Optimus reaches volume production. Now, that's not my analysis. I'm slightly different than him on that. I think when Elon shows us a really, really superior product that is clearly ready to go. Now, I think he's not going to put it into volume production until he has that version, but that's my day when I think the market will get it, as opposed to when it reaches volume production. But major valuation change when there is an unsupervised self-driving at scale. This is from Pilloly, Pilolly. Tesla Norway went from the worst quarter. Listen to this now. Tesla Norway went from the worst quarter in the last 5 quarters to the best quarter in the last 5 quarters in just 8 days. There are not many days with over 400 registrations, just like today. 400 registrations in a single day. So the stock took off today, then followed the market, around and ended up 1%. I think this Norway thing might have impacted markets yesterday because, we've been saying that Europe is crazily down. Elon's been saying sales are fine. We are not seeing any kind of discounts or any kind of suggestions that sales aren't fine. And then we get this today. Tesla dominates Norway sales charts as Q4 surges ahead. Tesla performance in Norway keeps climbing, with quarter sales breaking past previous quarters in both daily and cumulative charts. And so, remember, there was somebody that told us that they were in Norway. I reported that a couple of weeks ago. No, the problem is there's no inventory. Model Y continues to lead deliveries, with Model 3 and S. They show steady contributions. Cumulative growth across all quarters reveals consistent acceleration, showing how Norway remains Tesla's strongest per capita market. The spike in early quarter sales suggests optimized logistics and sustained demand heading into the year end. Now, remember, yesterday we had Stifel raising Tesla to 505. And then we have this now, Sawyer Merritt saying that TD Cowen has reiterated its buy rating and $509 price target on Tesla following a visit to Tesla's Giga Texas factory. The firm's analysis experienced FSD version 14 coming away with added conviction. TD Cowen, by the way, Stifel owns FSD 14. He's been riding around in it, so this is why he's got such great conviction. TD Cowen noted that FSD rides were smooth and impressive. The rides were smooth and impressive and expressed greater appreciation for the manufacturing innovation behind Tesla's upcoming Cybercab. TD Cowen views the April 2026 start of production for Cybercab as a sign of Tesla's confidence in scaling robotaxis on its hardware 4 platform, suggesting autonomous vehicles could become financially material contributors to Tesla's revenue in the second half of 2026. Material contributor by the second half of 2026. Spotted some fresh sightings of Tesla robotaxis. This is new, another story. Sorry if I didn't indent properly. The folks have been spotting Tesla robotaxi validation vehicles in Pennsylvania. This is also according to Sawyer Merritt. This will be outside Philly. Today, there was a New York Times guest editorial by William Cohen. And he says that the Tesla pay package for Elon Musk is excessive and unnecessary and wrong-headed for our times and culturally not the right move. Cohen calls the package an era-defining example of shamelessness, especially amid U.S. political shifts like the election of progressive New York City mayor advocating for taxing the rich. He contrasts Tesla's winner-take-all capitalism, where shareholders endorse Musk's windfall, with public sentiment favoring wealth redistribution, noting that Musk's political support for Donald Trump has alienated some investors. He takes on the indispensability argument. The piece mocks the board's claim that Musk is irreplaceable. Yeah, right. Yeah, he's not irreplaceable. No, he's just a normal guy. Highlighting risks if he departs, but arguing the hurdles to the plan are superficially fair, yet still rewarding him disproportionately. Cohen questions whether even greater inventors, greater innovators like Einstein or Edison, greater innovators. Yeah, okay. I could take on that competition. Cohen, would you like to have a debate? Let Cohen know that I'm ready to debate him right now on who is the greater innovator. Who's having the bigger impact on the economy? I mean, Edison had a massive impact on the economy. Einstein had a massive impact. But compared to Elon Musk, I don't think so. Broader implications that ties the packages to Musk's divided attention across ventures like XAI, SpaceX, and Neuralink, suggesting it will truly align his focus on Tesla. Proxy advisors like Glass Lewis and ISS would have agreed with Cohen. Oh my goodness. All right. So this is Randy Kirk. Please like, subscribe. I just flipped back into the old thing, didn't I? No. Please buy the book, buy the book, buy the book. Home Depot disappointed again. But it isn't being punched, at least earlier, it wasn't being punched as much. We're not going to be able to look that up here in a minute. But it was only down 2%. But until durables come back, I've been saying this about Home Depot for a while, and the Fed has to cut for that to happen. I think Home Depot will continue to disappoint. There's also a little bit of a protest going on, perceived that Home Depot is cooperating with ICE at their locations. But so far, I think that's probably not impacting the stock. Okay, reporting out this morning, or actually yesterday morning, but it was too late for me to get it. Construction spending during August was estimated at a seasonally adjusted rate of 2,169 billion. I think that's correct. Yes. Anyway, 0.2% above the revised July estimate. The August figure is 1.6% below the August 2024 estimate. But during the first 8 months of the year, construction spending amounted to was 1.8% below. So all of a sudden, construction spending is improving. Where do you think that's going? What kind of construction spending do you think they're talking about? But actually, residential construction was strong. So in addition to the commercial construction in the private sector, which clearly the private sector was up and the public sector was flat. So private sector is where all this is coming from, but residential construction was actually strong. Breaking this morning, new orders for manufactured goods in August up, following 2 consecutive monthly decreases, increased 8.4 billion or 1.4% to 612 billion. The U.S. Census Bureau reported earlier today. This is following a 1.3% July decrease. So this is more than replacing that. Shipments down following 3 consecutive monthly increases. This following a 0.9% July increase. Unfilled orders up 13 of the last 14 months, also increased. This followed a virtually unchanged July increase. The unfilled orders to shipment ratio was up. Also, inventories up. And this followed a 0.2% July increase. Inventories to shipments ratio was unchanged from July. So anyway, that would suggest business is good. I don't think this good news on construction and good news on housing, and good news on manufactured goods. I don't think this is what's crushing the market this morning. But we'll just keep going. Home builder confidence in the market for newly built single-family homes rose 1 point to 38 in November, so that's more good news. Here are the readings for the last three reports. Current sales conditions increased 2 points. Sales expectations the next 6 months, however, fell 3 points. Traffic of prospective buyers posted a 1 point gain. A further sign of ongoing challenges for the housing market, the latest HMI survey also revealed 41% of builders are offering some kind of a discount. That is a record in the post-COVID period. Well, the post-COVID period, though, has been nuts. Meanwhile, the average price reduction was 6% in November, which was the same as the previous month. The use of sales incentives was 65% in November, tying the share in September and October. Okay, these Fed divisions, as I mentioned, continue to be a problem, really split down the middle. And this is, I think, what's impacting the market more than anything. And so these little good pieces of good news that could impact the Fed's decision could be why the market, crunched down this morning. It was right around the 10 o'clock hour that this happened, which is when these reports came out. And that all the conspiracy theorists believe that that the insiders see these reports before they come out. All right. The Trump moved up another point to 47%. That was good news to see. Trueflation, about the same as overnight, 2.54. Goods, however, dropping down to 2.73 from over 2.8. The core down to 2.19. Services 2.47. I think that's up slightly. And PCE 2.59. I think that might be about where it was yesterday. Well, okay. All of that. Let's see if the markets have decided to go further up or further down. Like this, around the bottom, though. The Dow Jones is now down 1.11. It was down more. Tesla down 2.96. It was down more, but not a lot more at 396.82. The NASDAQ down 1.43, and the S&P down just 0.96%. You've got Apple up, but the rest of the Mag 7 is down, including Nvidia down 2.38. It was down more. It has popped back up pretty well. And the VIX is at 25.12. 25. Now, what's going on there? See what I'm saying? I didn't see the news. Let me know in the comments. What is the news? What's causing the VIX to be at 25? The only thing would be worry that the only thing I can think of would be worry that the Fed is not going to cut, but that's a massive increase this morning, up 12%. We've got the Cathie Woods all down, not surprisingly, and 1, 2, 3, around what you might expect given what everybody else is down. Now, the good news is that all of this negativity that's going on is causing the bonds to be down 3.7 basis points, back under 410 at 409.6. And we have got oil down another 20 cents to 59.71. You got natural gas down another 2.57 to 4.25. That's starting to get back. Love to see natural gas back under 4% again. I mean, $4 again. We've got gold down 1160, and that would be 4,063. Silver down 0.61% at $50 still, a little over $50 still. We were at 48 just a couple of days ago. And copper under $5, $4.97, but hanging in there pretty good. Copper, I'm not expecting to go down that much, but it might. It was down 450 not that long ago. The dollar is hitting fresh 9.5-month high versus the yen, but down against the euro. Bitcoin, which is now recovering a little bit, fell below 90,000. Its lowest since April, but now is up a bit at 92,848. And there you go. Oh, I'm sorry. Ethereum is up 4.16, 3 times as much as Bitcoin this morning, but 3,115, still a long way from almost 5,000, where it was not that long ago. All right. So coming up tomorrow, coming up today, normal day. No, completely this normal. I'm going to do a Brian White video in the middle of the day. If you like Brian White, I'm going to do that at noon. Then we're going to have Nicholas Gibbs at the normal time, probably around 5 o'clock, 5:30, something like that. And then I'm going to do a late one with a late Larry Goldberg special. So this is Larry won't be on the show. I'll be talking about one of his posts. Very, very important post. And so I'm going to put that in that slot tonight. So 4 shows today. It was supposed to be yesterday, but lots of technical issues yesterday messed up everything about my plan. So, and then technical issues this morning. I'm sure you know by now that X was down for a while. CloudShare, their cloud service was down for a while. Almost messed up my morning today, but not came back in time to save the day. Last night we had a great conversation with Gary Goldberg. If you want to go back and check that out, I'll put the card up. And we'll take one more look at the markets and see if there's been any significant change. Yeah, we're back down to the lows of the day for Tesla, pretty close to the lows of the day for NASDAQ, and pretty close to the lows of the day for the S&P. So I wouldn't be all that surprised if we take yet another dip. I guess I've said that 4 times now. So I guess it's time to say goodbye. It's been great talking to you.